Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician. Thank you so much for joining us for the first Market Carver of 2025. Hope you all had a wonderful Christmas and a happy a New Year celebration. And also, again, just thank you for being with us, and we look forward to another great year of sending these out to you each and every week. So we'll jump into the two topics we have for you. Not a ton this week, a little lighter as the news kind of dies down. But we're going to take a look at the surge in retirements that we've seen in the United States. Found this interesting in terms of the developments for those at or near retirement age. And then Andrew's going to give us an update in terms of how equities have been doing here as we transition from 2024 to 2025. So let's jump right in and take a look at this retirement surge. So this is taking a look. The dotted line is based on statistical modeling and projecting what percentage of the population is retired, those of a working age, 16 plus. And so the dotted line is the model, and then the thick blue line is the actual. So what we see here is, yes, there has been an expectation all along as baby boomers reach that magical age of retirement that there is going to be a rising percentage of our population that is retired. Many of you are watching. But there's also been a move here above and beyond that trend. I would point to two factors. COVID certainly changed the lifestyles for a lot of people, and that put many who had plans or thoughts of retirement and to go ahead and doing it and pulling the trigger. But also we can look at what's been a pretty long tailwind of asset appreciation. The stock market, especially in the United States, has been strong and really supported these rising assets to help fulfill this wave of surging retirees. So I found that interesting. Hope you did too. I'll move it over to Andrew to give us an updated look at equities and how they've been doing.
All right. Thank you, Adam. And impressive that you were to say 2025 without stuttering and saying 2024. I don't know if I could have done it. With that, as Adam said, we're putting a close now, putting a bow on 2024, and a lot took place this year. We came into 2024 with some analysts, some Wall Street banks expecting for it to be a down year, and it's continued to climb a wall of worry. We've done a lot on the Market Carver discussing a lot of the headlines that you may be seeing on the nightly news or in the local or national newspaper, and the market has been pretty resilient despite some of the things that maybe other market commentators or news anchors would have said should have been crashing the market. And so we thought this was kind of an important. I just went through and pulled some of the ones that stood out to me that happened throughout the year and kind of put them on this chart of what the market did this year. We started with the market hitting a new all-time high for the first time in 20 years. We then started seeing inflation tick higher. Apple, one of the biggest companies in the world, kind of trading back and forth with Microsoft and Nvidia, was buying $2 billion. We had GDP. We had an assassination attempt on a former president and now a president-elect Trump back in August. We had a market crash over in Asia. We had basically the entire travel market and banking have a cybersecurity issue. We had the Fed have their first rate hikes. And then we had a presidential election that caused a lot of people either concerned, depending on who they thought may be elected. And then here recently, through all of that, the S&P hit 57 all-time highs throughout the year. It continued to move higher, not despite with some volatility. As you can see, there were some down moves in it, and we're seeing one of those right now as we're off the highs by a couple percent as we make this recording. But throughout this time, the market's been able to climb this noise of news, this wall of worry, and continue to trend higher. And we think this is something we really try to make and emphasize and make important on these weekly market carvers, is to not get hampered or tied down to what we're seeing going on either in politics or going on around the world or things that maybe are impactful to financial markets. And we really try to stay focused on the actual data that's driving prices higher or lower, and let that be our guidepost for decisions to be made across different asset classes and within portfolios on your behalf. And so I thought this was a good just reminder as we close out the year that a lot's happened. And sometimes the market does respond to things and we do see corrections or we see the market shoot higher depending on what type of news it is. But most of the time we really do want to avoid getting too caught up in a lot of the headlines that happen each and every day. And so we definitely wish you Happy New Year, and we look forward to the prospects of what 2025 will bring.
Yes, absolutely. And well put. And we enter the year with our eyes wide open as always. So thank you so much again for your business and for your giving us your time to go over the market carver here. As always, if we can be of service, please feel free to give us a call, 800-928-4001, or scan the QR code and do it electronically. Thank you so much and have a great weekend.